Hey guys, welcome to this video. I'm just filming this one as we close out the markets this Friday, 11th of August. It's 5 to 5 p.m. GMT. And I've just brought up the NASDAQ. I brought it up via this ticker, the US 100 CFD. And there's a couple of things which we can go over because I did relentless posts, both to my private academy members who I teach and also publicly on TradingView. You may have seen those. If you haven't got my free training, remember you can grab it underneath this video, 100% free, and it will help you out a lot. So what have we got to discuss really in the most simplest terms? Well, let's take the story all the way back. Let's swap to 2022 on our weekly chart, as you can see. So 2022, you came off the back of COVID, big market rally, okay, index market rally, and you come all the way up, just above this point here, okay? So that rally had a similar bias for what we looked at here. And we used the same principles again. Now, if you follow me a lot, I do a lot of streams, posts, I teach many people, probably at least 1,000 videos online or videos and posts. This has the same premise when it repeats. And the reason why is for two reasons. Number one, fundamentally, when you get an extremely high price, you should never be long. Okay, you should never be buying because the longer it goes up, as you saw from here, eventually it has a crushing fall. And normally, the further it goes, okay, the bigger that fall is going to be because the market has to retrace at some point. And in this instance, you saw from the former move, you came down to your 61.8 fib, more or less. Now, typically, when you get these kind of rallies, you'll find that your higher MAs, okay, so for example, your 100 and your 200, they tend to lag, which is what you see here. And then once you come underneath, okay, you then retrace to them like that. So what we started to see on our NASDAQ is we were getting really far away from all these moving averages, okay? So your 200, your 20, your 40, and your 100, and you've still not come back to them. So we knew price was too high. Now, on that basis of coming up like it had before, we knew, all right, well, we need to DCA scale in, as we do. Now, you even had a slew of green candles bringing you to where you are now, and you finally get this rejection. And at this point, and I'll tag a link to the post I made, or a couple of the posts I made, you should have been questioning why you're starting to get rejection. Because if you look back here, that's where you were previously rejected, okay? You've seen the market fall once already, and what needs to go through your brain is simple. You need to start to say to yourself, well, I saw this happen, okay, and the price went down here and there and there, and it kept falling, and I've seen it all before. It's almost like deja vu. So what I start to tell all the people I mentor is, well, what do you think? Do you think if you've seen it happen once already here, then maybe, just maybe, when you come back there, it might happen again? And even regardless, the fact is, if you're going to rally from 10,500 points all the way to 16,000 points, that's a very long way. 50% or so of an increase, it has to come down at some point. So that's exactly what you're seeing at this moment. If you flick your timeframes down to your daily, and remember, you need to use all timeframes in conjunction, you can see you're getting harsher red candles to the downside. Now, I wouldn't be surprised if that continues its trajectory towards that key 100 moving average because you always come back. And it's more significant after a larger fall simply because if you put the timeframes back, instead of it being 100 MA, it's now a 20 MA in the exact same place. So using these moving averages is really, really important because it details to you what is a fair price for any asset at any time. If you go slightly lower, you can see you've got your 100 MA here. And again, I'm gauging where I would like to rebuy and what would be good market value. And it's likely you may see your 100 MA, skirt along and be around this level there, which again coincides with key price action. You've seen rebounds previously at this point before. Okay, so it's all about gauging the market strength, but mostly it's about understanding two things: where you should be short on market value and using what you already know. Because all you can do when you're trading is use exactly what you've seen. I mean, everyone can theorize and summarize what they think is going to happen to the NASDAQ. We can all do that. We can all do it, or we can talk about fact v fiction. Because if I said to you, the price has fallen here already, okay, at this point, and therefore it's more probable that it might happen again at the same place, given that you've come up in such a harsh movement. I mean, it only took what, January 2023 to July 2023, okay? It's really not long, is it? 7 full months pretty much. But that's a factual basis. You might say, well, maybe it won't fall, but then that's a maybe fictional basis because there's no backing for it. I mean, you could come up with all the reasons you want why it won't fall, but at the end of the day, facts always win. Logic always beats fiction because there's always going to be basis for why something might happen and where the probability is in the market. And at the end of the day, probability is the key word. Okay? Probability is what rules everything. That is what makes you able to have a long-term process and to have something that can be repeated as a method over and over and over again as a repeatable process. So at this point, you can see vicious PA pulling you down. Wouldn't shock me if you get nearer that 100 MA eventually. It's the same for various futures and index markets that I often comment on in my posts and streams and YouTube videos and things like that. So I hope that understanding is there for you. So if you don't mind pressing like and commenting below, grab my free training. It's also underneath. And just remember to trade with facts, not fiction always. See you in the next one.